Hello friends, welcome to Enjoy Financials classes. Today we are going to discuss, can a company hide its loss and so you present the balance sheet in such a way that it is generating profit. Yes friends, company can manipulate the information and show you or present the balance sheet in such a way that it is generating profit. So how? So practically we will discuss here. You see here I have prepared one small balance sheet as on 31st March 2022. Here the company during from 1st April 2022 to 31st March 2023, company has made the total sales of 1000. Okay, 1000 lakh rupees you can say, or even the 1000 rupees you can say. And out of that the company has incurred total expense 1180. So the company is having loss of 180. See, the income is 1000 and expenses is 1100. This is the total expenses. If you add all this, na, it is coming 1180. So from where the company has brought 180 rupees? So company must have brought from the his past savings, right? Cash and bank balance. I write cash and bank balance. So 1200 from this 200, it has paid 180 rupees. So the cash and bank balance is only 20 rupees now. And on the loss side, what it will do? Since the company has incurred 180 lakh rupees loss, so 80 rupees it will reduce from reserve and surplus and 100 rupees from the capital. So the company will have now net worth of only 300 rupees. So accordingly, the balance sheet size will also be reduced from 660 to 480. So this is the ideal balance sheet, you can say. Ideal balance sheet means this is how the company has shown you the actual loss. But friends, please remember that the company will not always give you the ideal balance sheet. I means they will always give you the balance sheet which may be manipulated. So as a banker, what you will do if you are finding such a balance sheet? First, we should know that how the company has hidden the loss and given the rosy picture of the balance sheet and converting that loss into profit. Okay, so that we will discuss here. See what company will do. See here, the total company has made the other expenses of 230. So it will not show you 230 rupees as a other expenses. It will show only 30 rupees as a other expenses. So company, how much company has hidden the cost means the expenses. The company has hidden the expenses. How much? Hidden the expenses 200 rupees. So now the total, since the company has not shown the expenses of 230, it has just shown the total other manufacturing expenses of 30 only. So because of this, the total expenses has been reduced from 1180 to 980 rupees. And because of this, the company will show the profit of how much? 20 rupees. So now you see this company has shown the profit of 20 rupees. So this 20 rupees, where it will go? It will go to reserve and surplus. So now the 80 plus 20, it will show the reserve and surplus is total how much? Now 100. Okay, so now the net worth of the company will be how much? 500, not 480. So the total liability will be how much? 680. And the total assets, see friends, this company has actually incurred 1180, but it has hidden the expenses. So the cash will be reduced by 180 because already the expenses has been incurred and it has paid to the different suppliers or different service utility provider. So the cash will be reduced by 180 to 20. So this they cannot hide right now. This figure they cannot hide. So that's why the cash will be reduced to 20. But how much the company has postponed? Postponed means how much the company has hidden the expenses. So the hidden expenses is 200 rupees. So what company will do? They will write deferred expenses. They will create one head here and they will write deferred expenses as 200. And because of this, the asset side it will also be increased to 680. So what is deferred expenses, friends? So deferred expenses is the any expenses which has been postponed and over the period of maybe 5 years, 10 years, they will gradually return off. So that is also called the amortization. So those things we will discuss in detail in later part of the video. But here I want to just show you that the company has shown the deferred expenses on the asset side. So as a banker, as an investor, as a financial analyst, whenever you finding any such type of entry in the asset side deferred expenses, what you are supposed to do while recasting the data into CMA? Simply you remove these deferred expenses from the asset side, 200 rupees. So that the moment you will remove from the deferred expenses from this side, so the asset side value will be reduced right now from 680 to 480, right? On the left side, what you are supposed to do, 200 rupees you have to reduce. So the reserve and surplus you have to make it zero, and 100 rupees you have to reduce from the capital side. Okay, so now the total net worth has been reduced to 300, and the liability side also it will come down to 480. This is what as a banker, as an investor, you should do the analysis. See, all the expenses when the company goes into liquidation, these are realizable. But deferred expenses, it does not exist. It is invisible. It is intangible assets. Deferred expenses, what is? It is intangible assets. So you cannot realize any time in the future. So, and this is just a book entry. So that's why deferred expenses on the asset side, please remove it. And on the liability side, from the net worth, you reduce it. So then again, you will arrive at the actual position of the company, right friends? Thank you so much. Hopefully you have understood that how the company can hide the loss and convert that loss into profit and show you the rosy picture of the balance sheet. Thank you so much.